Wow to you. I love money. Tricks to adjust portfolio. Provident funds in the midst of stocks falling without panic. When the stock index fell sharply, many people's heart was not good, including members who invest in Provident Fund, PVD, by choosing a policy to invest in stocks with a high percentage. They may feel worried about the value of their Provident Fund or how much they might lose. Especially people who are close to retirement during this period may not sleep well at all. But don't worry. It's not as bad as you think. Savings in Provident funds are long-term investments until retirement. Members must encounter the price of securities that go up and down according to market conditions. The price of the securities that has dropped at any one time will affect the capital value and the rate of return, which are accounting numbers. But if the next day the price of investment securities increased, capital value and the rate of return that we see will increase. This causes the capital value to change every day. As long as the member has not terminated the membership and has not received any money from the fund, losses or profits will only be accounted for, not real money. And if by chance that during the stock fall, it is the period that allows members to change their investment policy. Don't be so quick to decide to change your investment plan to invest in a low-risk policy because of the falling share price. Should follow the information from many sources and analyze the fundamentals first. Because the change to investing in other securities, the management company that is in charge of the fund must sell the members' existing shares at the current price. So it's like selling something cheap, resulting in less amount of money, and if the share price goes up, you lose the opportunity to get good returns. If you want to reinvest, you will have to buy more expensive than what you sell. Therefore, you should think carefully before deciding to change the investment policy. Before investing, we should first look at our risk tolerance. Some people take huge risks, but some people take less risks, so as not to lose the benefit or susceptible to the amount of investment that may decrease in each period according to market conditions, because Provident funds are long-term investments. Investment decisions should take a long look. Don't be shaken by the volatile market conditions at certain times. Like a boat, to reach its destination, it might have to go through some waves and wind. Should not give up the ship in the middle of the road. Investment as well. Be aware and not be too alarmed. For this condition, some Provident Fund members who may be experiencing a crisis which resulted in having to leave work and must resign from the Provident Fund member, or the employer cancels the Provident Fund, may lose some tax benefits according to the conditions of each company. And for those who do not need this money and still want to maintain tax benefits, can keep the money in the original fund to wait for transfer to the new employer's PVD. Alternatively, they can transfer money from PVD to a fund that is specifically established to support transfers from PVD, known as RMF for PVD. Members who are about to retire can notify the management company to gradually receive money from the fund in installments as well. However, no matter what type of investment you choose, you must remember that every investments are always risky. Do not arrange portfolios or invest according to your own mood or the trends of those around you. It's like you can't copy the exams from your school days. There must be a clear investment goal, so investors should look for the best return on the level of risk they can afford, and in accordance with investment goals. And one more important thing to keep in mind is retirement savings. It should be enough when we retire, because when I get sick, this money will help us very well. Wow to you. Thank you.